Tone deaf or right on pitch? Hi, this is Dean Jenkins with FollowMeTrades.com, and this is the latest market update published here on Monday, May 29th, 2017. And I sure hope everybody's enjoying a great Memorial Day holiday with friends and families. But I say tone deaf or right on pitch, I'm talking about the market, of course. And is the market tone deaf and just not hearing maybe some realities, or are they right on pitch and responding to the right things? You know, before I made that comment, I just had to go look up, exactly what does tone deaf mean? And I saw a funny comment, and it said, if you're out with coworkers or friends, and there's that person at the karaoke bar who insists on singing loudly and is just badly off pitch and is killing everybody, there's probably three causes. One is it's directly proportional to the size of the bar tab that's been run up, or they're immune completely to embarrassment, and C, the first item, or C, they're tone deaf. They have amusia, and they just can't hear differences in tone. They have no idea how bad they sound. So that's on a funny aside. But the market, from one perspective, could appear to be tone deaf in the midst of, just recently the Manchester attacks and ongoing terror threats and events, saber rattling in North Korea, maybe a poor reception in the European community by President Trump, and any number of things that could cause a problem in the market, on top of the fact that we're at a very long, we've been 8 years in a bull market, and most market cycles would suggest that at some point it's going to correct. So, could the market be tone deaf and continue to be put in new highs and just be ignoring maybe some of the things that should be paying attention to? Or is it right on pitch and just focused on key fundamentals, which are good, like low unemployment, growing PMI, a weakening dollar, the Fed beginning to back off on stimulus, raise interest rates, and some fairly good news on corporate earnings. So maybe the market, the collective participants in the market, are actually looking at the right things. Hard to say. We choose here at Follow Me Trades to trade according to the realities of what actually is going in, not to try and speculate why or what's going to happen. We do use prediction tools based on probability about what's going to happen. But the reality is the market's up, it's going up, it's putting in new highs. We look here at the S&P 500 daily chart. We can see we just put in a couple record highs this week. And then the Ichimoku cloud is actually continuing to project support areas, and the market's staying above those. So for now, it's going up. And so we are long several positions and going up with it, and we're doing pretty well. There's some sectors that are heading down, and we've been short in those and doing pretty well. So just staying tuned, trying to trade the realities, and not try to second guess the causes has been a pretty good formula for success for us. So what's going to happen next? Well, the market's heading up, right? And it's in an uptrend. Now, will it pull back on this way up? Yeah. Will there be a correction someday? History tells us there will be, but right now it's going up. So that's the update, and until the market and reality prove that something else has happened, we're going to deal with that reality and participate in it. As always, we like to take a look at gold, and the current reality with gold on a big picture is we've been putting in higher highs and higher lows, pretty dramatic, really since just at the end of last year. There's a higher high, higher low, higher high, higher low. Looks like it's heading on to more highs. It really does. Now there will be some up and down along the way. It won't be a smooth ride, but we are calling for and trading according to an expectation, a high probability of more highs to come in gold. So that's what we see here. So let's take a look at oil. Oil's been real interesting. So oil had been in a channel for over 6 months, and now it broke out of that channel into a pretty dramatic low. It pulled up into, so this is a lower low. It pulled up into a higher low, and it hit the Ichimoku cloud and reversed pretty sharply. A couple days, the last couple days been up a little bit. It really looks like it's going to encounter some more resistance and put in new lows. So despite the fact that OPEC and Russia and some other non-OPEC players have agreed to extend their production cuts even longer, it looks like we still have a pretty significant oversupply problem or problem situation, and the U.S. is not party to those and is continuing to produce and increase production. So just from a technical standpoint, the reality looks like more lows to come in oil. It won't be smooth. Oil is very choppy and volatile, but that's what the technical pattern shows right now. So to recap, S&P, the major indexes are putting in new records and still heading up. Of course they could turn around at any time, but so far the trend is up. Gold looks like it's got some new highs to come over the short period, intermittent, month or two to come. And oil looks like more lows. That's what we got in front of us. That's how we're trading. Of course, we always use risk control. You can't be right all the time, and we can protect ourselves so that when we're wrong, the losses are very small, and when we're right, the winners are very big. And that's proven to be a successful formula over time. Well, again, hope you're having a great holiday weekend, that you're safe, and that we take a moment to just thank and reflect on all that's been done for what we have. All right, well, hey, send me your questions, your comments, your feedback. I try to respond to every message I get. And thanks for tuning in. And as things get clearer and as things change, I'll be providing updates. Take care till then. Bye.